Yo, what up, HyperChangers? Welcome to another episode. Today I'm watching Snapchat IPO trade right now. I'm looking at 25 a share on Google, 40% since where it got priced at 17 yesterday. Everyone's going crazy. My phone's been blowing up. So I thought I'd make a little episode just recapping what I thought about the IPO. I think it could be helpful to explain a little bit how the IPO process works. When you hear all these rumors of Snapchat's being priced at 14 to 16 a share, and then yesterday they finalized the pricing at 17 per share, that number in theory is what they're pricing the IPO at to sell to investors, but the key differentiator there is you guys aren't the actual investors that get a buy. The investors who are buying at 17 bucks a share are these guys like Fidelity, Vanguard, these institutional owners who met with Snapchat during the roadshow while they were showing their presentation saying, we're Snapchat, we're going to IPO. Do you want to buy shares? These institutions sign up, and they're the ones who actually buy the shares. Then they open and start trading freely, and there's almost always what is referred to as the IPO pop, where shares trade at a big premium to what it's priced. In fact, companies will usually even strategize to price their IPO, like they know that 17 number is lower than what the market's going to pay, but they want to give some incentive for those institutional investors to buy at 17 instead of waiting to buy in the open market. So they always underprice a little bit, and then that creates the pop. So Snapchat is about 1.2 billion shares outstanding post-IPO. At 25 per share, that means we're looking at a market value of 30 billion. Remember, this is a company that only did 405 million in revenue in 2016. 30 billion. It sounds crazy. That's like an 80 times price sales multiple, and it is crazy, but I think it's a little bit skewed because unlike Facebook or Twitter, I think Snapchat is a lot earlier in its monetization ramp than those two players when they went public. For instance, Snapchat is targeting 1 billion in revenue in 2017. That's more than a double of what they did last year. Goldman put out a report saying they think that Snapchat could do 2 billion in 2018. So if we value them on their 2018 financials and we assume they can do 2 billion at this 30 billion valuation, you're paying 15 times revenue, which is still very lofty, but given Snapchat's revenue will be growing, 80, 100% at that time. One of the things that worries me personally about Snapchat is their negative gross margin. Sure, it's kind of the same business model as Facebook or Twitter where they're selling you ads on their social platform, but what's different is Snapchat has so much video embedded and there's so much live streaming video that the data infrastructure to actually support that is really expensive, and that's why their gross margin is actually negative even at $400 million run rate. We can dive more into that later in another video, but my point is that Snapchat is so early in its business model, we haven't even scratched the surface of seeing what this will look like as a mature company. That's why for me, it's like, we could be way overvalued, we could be way undervalued. The way I'm looking at Snapchat is ultra high risk, but ultra high reward right now. Facebook is trading at 130, 140 billion. You see the potential if the execution is there and the monetization works and they can continue building on this momentum that they have. And sure, Facebook is trying to copy everything they do, and I think there's two ways to look at that. A, it's a huge threat, and the biggest risk to their business is that Facebook is going to replicate, duplicate, and the users are going to actually gravitate towards Facebook or Instagram's features. That's like the worst case scenario and one way to look at it. The flip side is Snapchat must be doing something really, really right because Facebook is desperately trying to copy every single move they do. Facebook owns Instagram, they own WhatsApp, they have Facebook, they have so much data. I think they know the social media landscape better than anyone else. So they're in fact legitimizing Snapchat's leadership in the space by frantically copying them at every turn. I'm personally out of the Snapchat's sweet spot demographic, I think. I'm even a little too old, I'm 24. It's really about this teenager phenomena of Snapchat. There's just some je ne sais quoi that Snapchat has that Facebook had back in its old days that I don't think Twitter ever had. So I don't know, in this whole spectacles thing and their perspective of we want to be a camera company and just help people capture content and live in the moment and create memories, only something that's going to get more and more prevalent. Right now they're the platform for posting your memories and saving them. And so if they can continue to build on the memory social platform and be a bank for all your memories and experiences that you can re-experience live by jumping into the moment and then expand with VR and go into VR live experiences. I think this is what Zuckerberg's freaking out about because he owns the VR company, but the bottom line is he's not going to win VR if Snapchat is the platform where everybody's sharing VR content. They're a VR company, they're a camera company, they're a tech company. It's hard to figure out what they are. They figure out their business model. They have hundreds of million people using the service every day. It's sticky as hell. They have a chance to become a $100 billion company, be a titan in the social media space, go toe to toe with Facebook. That's the upside I see where, okay, if you're buying it today at 30 billion and you see that vision playing out where they go from their 150 million daily users to 300 million in a couple years to 500 million. You know, you can see this hitting that $100 billion valuation. Or I could see a huge flop happening. Instagram starts copying their features and it really starts working and driving down engagement, and then advertiser rates for Snapchat decrease. And then you kind of have the self-reinforcing death spiral, which has happened to Twitter, which is where their users aren't growing fast enough, so they have to blast you with more and more ads, which makes their users leave even faster. You know, it just crumbles. That's why for me it's just too high risk, too high reward. I am not in Snapchat's core demographic enough to feel confident that this is a service that's going to be around for the next 5 years. You're either going to hit a home run as an investor or get your shirt handed to you. For me, it's too much high risk, high reward, and other than the fact that I don't have any money to invest right now, so that's part of it too. Yeah. To sum it up, high risk, high reward. And I'm going to do another video where I go into Snapchat's financials, the business model, and how I think this could evolve out more granularly. I just want to put out a video today. Snapchat's trading. Happy IPO day. If you bought in, good luck. If you didn't buy in, you're waiting for a better price, good luck. HyperChange. See you guys next time. Really dope Moonshot Monday coming up, so